Hi, and welcome to Steel Talk. My name's Danny Stain, and I work in the steel fabricating space. And in this show, I reach out to industry insiders and try and get a handle on how people are navigating this rapidly changing landscape. For many of us, we're closing in on 2 months on shelter at home orders. For others, you are free range humans doing whatever you want. None of us knows for sure whether staying at home or ranging free is the right idea. We're all figuring this out at the same time. But in terms of the world's history, this is only the second time in the past 100 years when the entire world stopped at the same time. And that was back in World War II. But in the case of World War II, when the war was over, the entire world got a memo that the war was over and everybody rushed outside, rolled up their sleeves and started beginning the backbreaking work of rebuilding the world's economy. However, in this worldwide economic shutdown, it's highly unlikely that we're all going to get the memo telling us when it's safe to go outside and start rebuilding. There are even serious considerations of free roaming groups of people starting up a second or even a third spike of infection. And with stay-at-home orders, we have bought ourselves some time. We have helped avoid the massive burden on a medical system. And with relaxation of stay-at-home orders that are being considered around the world, right as we sit here today, we need to remember that this war is most definitely not over. This danger is still very real, and it lurks behind every corner. And so we must not forget this as we emerge from the safety of our homes. The reason for putting on the show is that I want to chat to a variety of colleagues, customers, partners, and friends all over the world so that we can gather as much pertinent data and informed opinions as possible and create some sense amongst all the misleading information that is being spread on the various platforms online. So one of the most important questions that I personally struggle with is how does this 2 month to whoever knows how long it's going to be, this serious dip in our economic activity, how is this going to affect the overall social and economic outcomes of our country and the world? And for any of our viewers who feel the same sort of thing, that if you're watching there, if you have any questions that you'd like to ask us, please feel free to type them in the comments bar and I'll attempt to get to them during our conversation. When I have questions of this magnitude and I need answers, there's generally one guy that I always go to when it relates to the financial questions I need answers to. He is my good friend and colleague, Skip Brock, who amusingly calls himself a recovering attorney. But Skip is so much more. He's the co-founder and past chairman of SerisFirst Bank out of Alabama, a bank that he took public in 2014. He's currently retired. He's living outside of Birmingham, Alabama, and he dabbles in the world of equity investing. He's also an avid motorcycle aficionado. He's a pretty decent off-road rider, a pretty skilled wheelman behind the wheel of a race car. I would call him a modern-day Renaissance man if ever there was one. So without further delay, I'd like to welcome my next guest, Skip Brock. Hey, Skip, how are you?
Hello, Danny. Thank you for that flattering introduction. I never thought I'd embark on another career after so many that I've already had, but here I am. Now I'm a podcast star. I mean, sky's the limit, I guess.
So, Skip, before we get too deep into the woods about the economy and how we come out of this, for the context for our viewers, sketch us how you came about, what your upbringing was, and how you were able to build a bank from scratch to a point where you're able to take this thing public. I think it was in 2014, if I'm not mistaken.
That's close enough. I'll try to give you the abbreviated version. My father was a banker. He actually started the bank that is now BBVA Compass in 1964, and grew it into a regional sized bank, and then ultimately sold it out to BBVA, and so hence he managed to build a pretty good nest egg doing that, and of course being family, I benefited from that. I did not want to go into banking. I chose law. Uh, Went to Vanderbilt, got a law degree, practiced corporate law with an emphasis on financial transactions for 20 years. And in that period of time, it did end up getting involved. It's kind of like Jupiter. I guess it's just got so much gravity that the banking pulled me back in. I ended up on the board of what was then Compass Bank, and it was public at the time. So I got some experience there. And then through a series of misadventures that I won't bore you with, I ended up out of law and into the wild blue yonder, and took about a year to figure out what I wanted to do with the rest of my life. In the meantime, I learned that, and I realized that I had a pretty good little investment nest egg that it allowed me to go out and take some risks. And that, as Danny knows, people like risks. They end up getting into all sorts of things, including racing. So ultimately, racing sucked me in. But I was too busy earlier in my life for that. And so I went into private equity. I mean, really private. It was I invested my own money or family money. If my brother and sister wanted to participate with me, and went through a series of investments, some of which I like to talk about, others which I don't. But you learn more from the ones that you don't want to talk about. But in the end, I ended up getting sucked back into banking. I met a guy in doing civic work, and he just impressed me so much. He was at a local bank at the time, and he just got it done. I mean, we'd say, okay, here's our fundraiser. This is our list. Who wants to take whom? And he'd volunteer for like 5 people. He'd come back a week later, called on all 5 of them, and hit on 4 of them, and brought back the money. So it was just really impressive. One day he said, "You need a new phone number for me." And I said, "Why?" And he said, "Well, I quit. I quit the bank." And he was like 55 years old. And I said, "Come on." He said, "Yep." He said, "I'm going hunting and fishing." And I said, "Look, once you're done with hunting and fishing, you call me, whatever you want to do, I'll back you." 2 weeks later, he called me and said, "Let's start a bank." So, yeah. So between the two of us, we had quite a bit of experience in that. He had already, the bank that he quit, he had already, he was one of the co-founders along with his first cousin in that bank. It was called First Commercial Bank. And of course, we both had a lot of banking background. So together we managed to put together, it was a private venture to start with, but we had over 300 shareholders. And then, as you noted, we later went public and went to New York and rang the bell and did all that stuff, and went to the big party afterwards. And I told my wife Brenda at the time, I said, "This is the beginning of the end for me." It's just being the chairman of a public company is just too constraining. You have to watch everything you say. So I've served in that role for 15 years, and about a year and a half ago, I decided to leave that position, and now I can go on. I can go on Steel Talk and say whatever I want.
Well,
So
thanks for
get
that.
ready.
Well, thanks for that insight, Skip. Just give me an idea of the type of portfolio that your customers at SerisFirst typically comprise, because that'll give us some context for how we talk about your experience with the bank, its position, and how your customers, your previous customers, are actually feeling under the current thing. And I did take the time to listen to the Q1 call from your bank discussing some of that. So give me some idea of where your portfolio is.
Okay, I think the most salient point is SerisFirst is a commercial bank. We have a very heavy stress on banking businesses as distinguished from uh, consumers. And the man on the street, probably we would not find us to be a very convenient bank, because the city of Birmingham, where we have over $2 billion in assets, in a city with a population of over 1 million people, we've got 3 branches.
Right.
3.
Yeah, that puts it
So
in perspective.
our customers, um, that's okay with them because they're businesses, and we offer all the latest services with regard to online banking and so forth. And they're sophisticated customers, and that works for them, and it really works for us because it keeps our expenses down.
Is there, in terms of the industries that you serve, are there areas that you don't touch, or is it you literally take a range of commercial customers?
Well, yeah, everybody has their hot buttons and their cold buttons, and my cold buttons were always anything at the beach. We don't do beach stuff. We've got to be very light on restaurants and hotels and the entertainment industry.
That was something that you had done long before COVID came along.
Always.
You just weren't in that. You weren't in hospitality.
Yeah, and that's day one, and that's kind of my. I don't call it a prejudice because it's just based on experience. When I practiced law, when times were good, I closed deals, and when times were bad, I closed businesses.
Right.
And put them in bankruptcy. And I saw quite a few bankruptcies in those businesses. It's just.
All right. Well, I think that gives us, and so no. Anything? What about oil and gas? Anything like that? Is there any particular, any other areas that you don't touch? Or I mean, you do real estate, you do manufacturing. What else?
We have nothing directly related to the oil patch. It's like commodities are very volatile, and oftentimes the whole industry is thinly capitalized. So we're too conservative for that. Again, I haven't been chairman in over a year and a half, but we used to have some, like a couple of companies that were in the oil field service business. But that would be it. Very little exposure there. It's really a lot of just businesses. A lot of mom and pop. And mom and pops can get pretty big. But
what is the sort of a revenue cap? What is a revenue cap for a kind of companies that you would finance? 50 million and below, 20 million and below?
Yeah, we can easily do a $50 million company. I mean, we have assets of just over 9 billion in our footings, and we're very liquid and well capitalized. So
I'm more interested in getting an understanding of. Sorry to interrupt there. I'm just more interested in getting an understanding of the type of people when you hear people whining and complaining or cheering and celebrating. I want to get a sort of a feel of who those people are. So it sounds like it's smaller mom and pop, mid-sized businesses.
Yep, and some public, but mostly private businesses. Family-owned enterprises.
All right. Well, that gives me a good insight. But Skip, you and I met, I think, a little bit more than 10 years ago.
Yeah.
I'll
never forget it.
Well, what's amazing is that based on that auspicious meeting, it's really surprising that we're actually such good friends. Do you remember the circumstances of that?
Quite well. You were on a hot lap in qualifying, and I got in your way. And boy, did I hear about it after the session. And I didn't really receive your criticism that well, and we ended up behind the trailer. No blows were exchanged, and we reached an understanding, and we ended up respecting each other and became good friends ever since then.
Yeah, I
Yeah,
think
I remember.
I think that first meeting was a really sort of it would have should be a Harvard Law School review of value sharing in the extreme. Um, it was a lot of give and take, and that was the wonderful thing. And I think that's where the friendship evolved from. Is that I think you and I have both been able to sit back over the years, exchange a lot of different ideas, some of it where you and I do not agree on,
Yeah.
and other areas where we do. In fact, what surprises me is that you growing up in the backwoods of Alabama, the deep south, me growing up even further south on another continent in South Africa, different times, different environments. A lot of our philosophical ideas are actually very similar. But there are some areas that we completely do not see eye to eye. And yet, despite that, we've always had this curiosity about each other's viewpoints. And I think that's part of what made this friendship evolve.
But you have the ability, regardless of some of the ridiculous ideas you have, you are very good at articulating them, and that's a key to having a respectful conversation. Is for two people to be able to state their position and do it in a way that can be understood. And now, I might disagree with you, but I'm pretty sure that I'll come away from any discussion with you with at least an understanding of what you believe and why you believe it. And I think I can do the same thing in return to you. And
Well,
that's valuable. You don't
and I
have to.
think it is, and I also think that's a skill that's being lost at the moment. Um, I you know, I personally I feel that my ideologies and philosophies are actually in a continuous state of evolution. They're developing still, because I remain curious. So my question to you is, old man, um, have your philosophies and ideologies completely just ground to a halt? Are they cast in stone, or are they still evolving with time?
I don't know who said it, but someone once said, "When you stop learning, you start dying." And uh, I try to learn every day, um, and and so I read a lot, I listen a lot. Somebody else said you can't hear with your mouth open, uh, so I try to keep my mouth shut some and listen. And no, I'm learning all the time, and my viewpoints shift, but it's more of a glacial sort of a process than an earthquake. But yeah, and but the main thing is to take a thoughtful and skeptical approach to every question, every issue, and ask the questions and test assumptions. And I actually enjoy that process. I suspect a lot of people find that very uncomfortable, but I'm an exception to that rule. Um,
And
it's
Skip, I
just
think that's really why your and my friendship has evolved, because I've always seen this curiosity from your perspective. So thank you for that, because I've always found our conversations very enlightening, and I often walk away and I have a newfound understanding for something that there's a perspective that was revealed that I hadn't seen before. But look, this in terms of sketching a scenario, an introduction for where we're going to get here on the economic upturn. This is about the longest intro I've ever done. Here we are, 20 minutes in there, and we haven't even got to the substance. So,
yeah. Let's talk. Yeah, let's
all
talk
right. So
about
here we are. We're two
other
clueless
stuff.
guys. We're two clueless guys sitting on the other end of an internet connection. We're raised in different
Hmm.
continents, different times, trying to put our heads together and figure out what's happening right now, what is coming to us in the coming months and the years, um, as citizens, as businessmen, as investors, and as retirees. 6 weeks ago, when this pandemic hit, you might remember the first person I called was you. And there was a question I had. Do you remember what the question was?
Uh, it's been such a torrent, such a flood. I know.
My
I
question
don't
to you
remember
is,
what it was.
my question to you was, do we
It
have a
had to do with
problem?
the financial system collapsing, I think.
No, I was curious. Was, do we have a liquidity issue in the financial
Well,
system?
Okay. Yeah. Well,
Do you remember? And do you remember your answer at the time, because it was really pertinent?
yes. Yes.
If you wouldn't mind.
Um, I, you know, it's so nice being right. You know, it's just fun being right. I said at the time, I said uh, the Federal Reserve, the Treasury, everything at the government's disposal will be brought to bear to avoid a liquidity lockup like we had uh, back in the '08, '09. There were a lot of hard lessons learned then, and I said that it's just not going to happen. This is a different kind of crisis, and it didn't start in the financial world. It's not systemic to the financial system, and uh, it's an external force that's being applied to society, the economy, the government, our daily lives, et cetera, et cetera. But the impact on the financial system will be substantial. I never said it wouldn't be, but and it will, it has been, and it will continue to be. But we're not going to have bank failures. We're not going to have runs. We're not going to have banks refusing to lend each other funds overnight, and the sorts of things that were happening back then. We've had a little bit of that, but boy, as soon as it poked its head up, the government was all over it. The Fed would just say, okay, you can't borrow the money from each other. We'll give it to you. Cheap, real cheap. So
All right.
there
Well,
you go.
yep. And that's pretty much, and you were spot on there. The Fed jumped in. The stimulus money has been flowing, and it looks like it will continue to flow. So yeah, liquidity, not so much of an issue. Fantastic.
No, and
Okay.
that's really important.
It's
That's
absolutely
totally
it's critical
important.
for everything. It's
Yeah,
it's the bedrock of how the American economy
yes,
was built. It was built on leverage. It was built on the ability to borrow money. Without that, this thing doesn't evolve.
right.
Um, so I also asked you then, we discussed a little bit, this is going back 6 weeks ago, and I said, how do you see the economy? Was it the economic recovery? Was it going to be a V, a U, a W, an L? What are we going to see? And do you remember what you said back then?
My opinion early on was that it was going to be a quick and strong recovery. Qualified that, I believe, I hope I did, with it. It's going to be also spotty. It's not going to be the same for every sector of the economy. But I felt that there was if this, at that time, had they started the lockdown then, Danny?
No, no,
I don't
no, this was
know,
6 weeks ago. It
but
hadn't
but it
happened yet.
looked like it was, it might
It was
happen.
being considered, correct.
Yeah, and I felt that even a lockdown would not crush the economy, because I felt as though it would just people would not change their attitudes that readily. It would take a long time, and now we're 2 months later or 6 weeks later, and now the lockdown has come, and now the lockdowns are starting to be lifted. Remember, the other thing I think I said was people can't stay panicked for very long. It's
It's an
hard.
unsustainable position to
Yeah,
stay in. Yeah.
it's really, it wears you out being panicked all the time, and people get tired of it. And I think that's what we're witnessing now. People are saying, "Oh, this is pits. I'll take my chances."
Yep, that's exactly how I remember our conversation. I think you were talking more of a V, or maybe sort of a ragged V recovery, and
Yeah,
I
I
was
thought it
seeing
might
more.
be. Yeah, might look like a caterpillar,
Yeah,
kind of
yep,
bumpy.
I get that. And I was in back of my mind, I was seeing more of a sustained U, and I've been maybe a little bit not pessimistic, but I was seeing things that I was so let me pull back to what my viewpoint was. 2000 entering into 2020, we're in the greatest economic run, I think, 12-year bull market, the confidence at an all-time high, stock market at almost 29,000. You
Yeah,
look at all of these things. When you have that amount of confidence in an environment, in a society, borrowing is at an all-time high. This is just human nature. If it's going well, it's only going to get better. And so I was concerned about excess leverage in the system. And once you start to pull a couple of these cards out of the pack, I was concerned about some of this sort of leverage starting to come down. And then we also had the double hit of the Saudi Russia oil play,
Yeah.
where they agreed to just pump as much as they could, and we had excess production at the exact same time we had zero demand. And we've seen how that's played out in the oil market, and we've had, tremendous amount of economic leverage in the Texas fields and in the oil shale and the natural gas and fracking environment. And so I was really concerned about the amount of leverage in the financial system. It hasn't turned out to be as quite as critical as I imagined, but we're seeing banks. I mean, not maybe not SerisFirst, but we're seeing banks are trading in the last month in PE ratios of 4, 5, and 6, which is absurdly low in an economy like this. So you can sense that there is a fair amount of this concern for the financial sector. Are you still totally confident that there's not going to be significant failures within the banking system in the United States?
Uh, yes, I'm confident that there will not be a significant number of failures. In every industry, they're good, better, best, and worst, right? There's going to be some poorly managed institutions that are going to get themselves in trouble, and they'll end up being forced to sell. I mean, there'll be business continuity. You're not going to see banks, people showing up one morning and there's a sign on the door that says closed. That's not going to happen. And as far as the leverage thing, we've never gotten that deeply into it, but there's the loan demand among businesses really never went nuts after '08. Businesses became very cautious and very careful about borrowing. You know it, Danny, in your business. When did people really start investing in capital goods?
Takes time.
It took years, did it?
Absolutely.
Yeah. All right. Where was the big leverage? The big leverage was in big public companies borrowing money to buy back their own stock. I hate that. Okay. And they're some of those are going to pay the piper because they've loaded up the balance sheet with debt just to try to increase their PE ratio. I've never liked that, and my bank will never say never, but anyway. Certainly not while I was running it.
Okay. Well, let's leave.
And I know the current CEO, and I know darn well he's not going to.
So let's leave I want to leave the
that.
stock market out of this for a second because I want to come back to this later. I'm more concerned about the economy as it affects myself and affects my fabricators and the people that play in this industry. I read this morning. It said HSBC was making some sort of idea, and they said they had a 48% plunge in their pre-tax income, and they were forced to put $3 billion aside to cover bad debts. And still am seeing quite a bit of pain in the financial industry. And they said that the outlook for the world economies in 2020 has substantially worsened in the past 2 months. The impact and duration of the COVID-19 will likely lead to higher expected credit losses and put pressure on revenue due to lower customer activity levels and reduced global interest rates. Nothing about that language that you wouldn't expect. But a 48% reduction in pre-tax income over a 2-month period is a world of hurt. And if that's indicative of what's going around in either financial sectors or in businesses, and we know there are plenty that haven't seen this pain is going to take quite some time to excise itself out of our financial system and our economic system. Or am I missing something?
No, you're not missing anything. Of course, it's going to take. There's going to be a sorting out. One of the things, the legacies of the financial crisis is that the government has has mitigated a lot of the forces that would have led to a sorting out, a natural sorting out that happens after a big downturn. There are a lot of zombies still walking out there in the business world. This may finish them off. Now, some of that's going to depend on what the government's willing to do to prop them up, and it may be considered to be expedient to continue to do what the government can to support the weak sisters in the business world. And that's not a sustainable policy, but it may be expedient in the short term.
Yeah, and there's a whole philosophical
bumped my computer
there. There's a whole philosophical debate we can get about whether governments really should get involved or whether we should have the survival of the fittest. And there's a really interesting debate that we can get in there. But if we look at the Federal Reserve, they've released about 3 trillion of stimulus funding, and it looks like there's still consideration for more if needed. And this takes the Fed's balance sheet past 5 trillion for the first time. Our deficit to GDP has grown significantly. And this begs the question, our tax dollars, are they going to be spent in the coming years financing debt repayment, or are they actually going to be used to finance infrastructure requirements, which, let's face it, are deep and well needed? But if we continue borrowing at this rate, are we not burdening our children with a massive problem? We're partying like it's 1999 here, having fun, and we're fixing up everything. The government puts it in, but the pain is coming to our generation downstream.
First, on the tax question, the taxes aren't going to touch this. There ain't no way you're going to tax yourself out of this hole. No way, not happening. The government has set itself on a course, and I think most of the world governments as well, Germany being an exception, at least for the time being, Japan leading the way, of just borrowing and borrowing and borrowing again, borrowing to pay interest, borrowing to roll principal, just borrowing like there's no tomorrow. And I'm afraid that we are now fully committed to that course, because there's no way you can tax yourself out of a multi-trillion. And we're not done with the trillions. I agree with you. So that's the next thing. There's more trillions coming. And the U.S. at the present time finds itself in the position of the dollar is the world currency. That gives, and the U.S. is the least worst of the irresponsible governments of the world that have enough currency in circulation to serve as the worldwide medium of exchange. But get away with it for a long time, and ultimately though, it's either going to have to be inflated away. I don't want to be around for that.
Well, that's my next question, because that's my next question. I mean, this trajectory is unsustainable. So you have
everybody knows it, by the way, if they think about it.
Yes, I know we know it, but we don't want to do the hard work to get ourselves out of this. So we're kicking the can down the road, and we literally are handing this this burden to our next generation. At which point does somebody actually do something about it, and what vehicles are there to do it other than hyperinflation? What else can you do?
I think the discipline on that score is probably going to be imposed externally. Somebody is going to try to knock the dollar off. Somebody is going to think they might be able to call in their chits and create a crisis, or it's just going to go on until it just sort of grinds to a halt, and then you've got a default. It's just, it's like, and that it wouldn't be the first time in the U.S. history that the U.S. is reneged on its international obligations. Roosevelt took us off the gold standard, set it on an arbitrary value, collected everybody's gold coins and melted them down and put them in Fort Knox. Okay,
and then sold them back to
boom.
America again at an
Yes,
elevated
yeah,
price.
and the world did not end. The world didn't end. And then you know, I can remember when I was a kid, they had these things called silver certificates. It's like, hey, can I go get some silver? Well, not really. And then finally they quit even calling them that. They just call them Federal Reserve notes, which they are. They're just debts. They're just like little notes. The Fed says, if you'll bring me this dollar, I'll give you another one just like it. Wow. And they got away. And then Nixon, you know,
Well, let's
he did it. You know, okay. So it wouldn't be. That's what's going to happen.
Okay.
I just don't know when.
All right. So I'm a little bit concerned. Obviously, you and I both have children. We have grandchildren, and we're concerned about what we're doing to them and how
That's
their
not my.
lives.
I didn't mean to have children. It's not my fault.
Yeah, and I inherited mine. So put it
Don't
that way.
blame
Okay.
me. Right? You married them.
All right. So okay, I'm really interested about this thing philosophically. But let's take a step back from the financial side and let's just take a look at this amazing US population. You were born here, you don't realize just how incredibly amazing it is. I think you and I have had some conversations about
Yes.
sometimes your greatest strength is your greatest weakness. I think we've agreed on that sort of concept here.
Yeah.
But this territory that we call United States, it was founded by an incredible collection of people, of independent, self-starting people, free-thinking people that left the safety of their own environments, wherever that might be in Europe or whatever. They came over to start a brand new life, free of religious persecution, free of political persecution, economic persecution. They gave up everything for a new start. And this gene
Yes.
pool that populated America is very different to any other gene pool around the world. It's really very special, incredibly special. So here we cherish our independence. We don't like to be told what to do, and we want and we demand our freedoms. So if this is our greatest strength, could this also be part of our greatest weakness? Because I look at it here and I just want to figure it out. Right now, we're 328 million people. We're 4%, just over 4% of the world's 7.8 billion population. Yet we have 30% of all the infections, reported infections, and we have 25% of all the deaths related to coronavirus. So we're doing something different to what other countries are doing. Obviously, we have more travel, we have money, and that makes people mobile, and that means spread of this sort of stuff, and all of those things. There's a million factors that come into this. But we don't want to go into lockdown. We've seen what draconian measures have done in some countries and has managed to literally flatten the curve, and our curve is literally nowhere in sight of flattening. And we're about to relax the stay-at-home orders. So my question is, what happens now? And is there ever a time for a heavy-handed, draconian government or not? And I know how you feel, but I'm just curious about this.
Well, I think in one of our other conversations, I made the point that we've been, as a nation, we've been through a number of different epidemics. I don't think any of them have been called a pandemic. I don't know, but and we've never had this complete draconian lockdown sort of thing. And somehow or another, everybody managed to get through it. With they accepted the cost for the freedom's not free, and it's going to have cost, and that applies in this case as well. And my position has always been that waiting for some kind of vaccine that may very well not work, waiting for some sort of a cure when viruses are notoriously hard to cure. And, the chances of that, not so good. People have to reach the point of acceptance where they know enough to overcome the fear of the unknown, and they simply look at the situation and say, okay, I'm willing to take I'm willing to take the chance. Just like I do when I get on my motorcycle. I mean, I know that there's a possibility I'm going to get hit by a car, or have a blowout when I'm running down the road at 90 miles an hour, whatever. There's any number of dangers that I accept. I don't go through the list every time I throw my leg over, because otherwise, I'd never get started. But that's what needs to happen, and I sense that it's already beginning. Now, do people have perfect information? Hell no. But do they have 9 million people that live in the the boroughs around Manhattan? Yeah. Are they all on top of each other? Do they ride the subway? Yeah. And that's where half the disease is now. And there are other parts of the country that could get off virtually unscathed. I don't know, but people are coming to the point where, for better or worse, out of knowledge or ignorance, they're overcoming their fear, and they're getting out, and they're going to go do what they do. And I see evidence of that all around me.
And
every day.
I believe in your state, that Alabama, the governor of Alabama, is about, I think today is about to start relaxing.
Yes.
There'll be a phased relaxation of the stay-at-home order, and I think this is coming pretty much to every state very quickly. And I think worldwide too, we're starting to see the sort of acceptance that at some point, 50% of the population. There's an interesting question we have here from a Kevin Beaver. He says, "Do you ever think we go back to the gold standard or something similar?"
I have a short answer. No.
No chance. Not from the U.S. perspective at all. No.
Not a chance. Not a chance.
We'll get into those in a separate discussion. We'll have a session with Kevin at some point in the future, and we'll discuss the reasons why. But let me come back to this thing. So
ask
right
me
now,
a hard question. Ask me a hard question, Kevin. Come on.
Okay. All right. Okay. So Skip, here we are. We're relaxing the stay-at-home orders. We're about to create some free-range movement, and there's a potential chance of a second spike, or possibly even a third spike.
Yeah.
In terms of human psyche, how do the states, or how do people and how do business respond when we start to see a significant upwards trajectory in a second spike? What happens then? Because you've seen it in business. You've seen it when you can see a bounce in the market or a second dip in the market, and you've seen the behavior of people and their psychology, their emotional fears and hopes. What happens if this becomes evident in the results?
I think that intuitively, most people believe that the cases that occur in the general public it's going to look kind of like a caterpillar. It's going to go up and down. It's going to have bumps. I don't think that's going to surprise anybody. Part of it then depends on how severe is it, how widespread is it here and there, is it more generalized? But I think that people are reasonably realistic about the chances of more infection. I just think they are. And similar to the flu, who wants to get the flu?
Okay,
I've only had it once, and I'll never forget it. I don't want to get this C-19 thing. But if you could find me out in my car every damn day, what can I say?
Okay, so let me ask you this, because
I'm in the target. I'm in the target market too. I'm almost 70 years old.
Well, please be safe. So, Skip, be safe. But so the reason I'm getting to this question is because we've gone through a voluntary stay at home. We've all cooperated. We've now had the frustration. We're about not so voluntary, but we're about to be let free. We're about to go out and socialize. And if we then have a significant spike, and once again we don't know the severity and the duration and anything, but and I'm just going to give you an idea, if it's a significant spike, do you believe we as a population are capable of going back under a lockdown order again?
Mm, I think that is less than equal likelihood. I do
And that's
not think that. Now, I think that people will demonstrate a willingness to take measures um, uh, out of respect for each other, such as masks. Um, the glove thing, I don't know, that may be counterproductive. You see people wearing the same gloves all day. I just have a feeling that's not that great an
that's not
idea.
achieving anything. Yeah, exactly.
Yeah, it could be actually counterproductive. But and not just different behaviors. But no, I don't think that unless it is just you got to have people dying in the streets. I think for people to lock themselves up again, and then it'll happen by say. And by the way, one last thing, let me say, I think a lot of employers are going to impose pretty damn draconian measures on their workers as far as uh, hygiene, separation, masks, the whole deal. I think that's going to be very widespread. Who wants their workforce to all call in sick? It's just
Exactly,
not practical.
exactly. Anyway, I'm just John McGivern sends you a question. He's asking, what sectors of the legal industry do you think will be hit hardest by this? And also, what is Brenda making for dinner tonight?
Okay, Sharp. Um, the legal industry is already kind of on its back. It's never really recovered from the financial crisis. Um, I think that winners are going to be people who do uh, corporate and debt restructuring. Uh, in other words, bankruptcy and
Sure.
workout lawyers.
Yeah.
Um, I think deal lawyers will do okay. Um,
Divorce
you
lawyers are going
know,
to have a fantastic run, that's for sure.
I, I do think that yeah. I mean, I think the domestic law probably picks up. I think this is probably good for most of the legal industry, including M&A, not necessarily for the reasons you'd like for it to be, but defensive uh, mergers uh, and bear hugs and all that kind of stuff. But no, I think and then the players, the plaintiffs' lawyers are like the flu. I mean, they're always there, so they do well regardless.
All right, look,
But their
we
business
could.
might pick up.
All right, and you'll have to send us what Brenda's making for dinner. You'll have to send us that note separately.
Well,
Let's take a.
unfortunately, I think it's in the crock pot, so it's probably yeah. I don't know.
All right, we're running a bit out of time here, but the one thing that I did want to touch on today was the market. I've left this towards the end because the market is right now appears totally disconnected to the economy. I see significant um, economic pain and hurt, extended pain and hurt in the economy. We saw the market drop down, and basically exactly a month ago, it hit the lowest point between the 19th and the 23rd or 24th of March, and right now it's bounced back up, and I think we're, I don't know, 16% off the highs of the all-time record bull market. Is there why is there such a disconnect by what we see the market doing and the pain that a lot of us are seeing in the US economy?
Well, as far as the market goes, the old saying "don't fight the Fed," that's very much in play. I think that the artificially low, basically repressed interest rates uh, for the last several years have pushed people into equity. That that's no surprise. Um, both the stock market and private equity. There's been a lot of activity in both those areas. Um, is there a disconnect? Well, yeah. I mean, the Fed is protecting us from economic reality. in the business world to considerable extent, and I ultimately, as we said, somebody's going to pay the piper on that, and selfishly, I hope it's not my generation, but it's going to hit. And but the one thing I'd like to say philosophically, there's a lot of ways to try to measure prosperity, whether it's the gross national product, whether it's this or that. But really, it all boils down to it's more of a feeling. Do you feel good? Do you feel? Are you hopeful? Do you think the future is going to be better than the present? And the present, even if the present's a little worse than the past, what is your attitude? What's your mental? What's your the zeitgeist of the entire population? Where does it all go? And the sense that I have on the market and the economy in general is that I think the market is anticipating a pretty solid comeback, a pretty fast comeback, but not. It doesn't have to be like it was for it to be good. And I think there's been a shift. There's going to be a shift and continue to be a shift in the frame of reference.
Okay.
I'm really old.
So you
I
in terms
remember, yeah.
in terms
I
of
can
the market,
remember when there was no air conditioning. Nobody had air conditioning, right?
now you're showing your age.
Yeah, I'm showing. I admit it, and I mean some people did, but just the living standards. My living standards as a child are below poverty level, and in 2020, that's how much that's changed. But we didn't feel like we were deprived. We didn't feel as though we were somehow or another living a terrible life. We were having a good time.
No,
So
I think
it's a matter of
I
perspective.
think very much the U.S. feeling. I think we've sort of seen the bottom of the emotional roller coaster for sure. I
Yes.
think the fear is past. My question is, have we seen the bottom of the stock markets, the bottom of the stock market and the bottom of the economy? Or are we only going to see that in Q3, sort of September results? Because Q2 is still a little iffy. Q1 results had no relevance. My guess is by September we'll have some idea of the depth of this economic downturn.
I'll tell you what is irrelevant. The numbers that you're going to see in the next couple of three quarters
Yeah.
have no meaning in this context. Mainly because they're intended to be a measure of public investor and consumer sentiment in a time of normal economic activity. Not, it's just not that way. They're going to be horrible. They're going to look absolutely terrible, and the stock market's already taken that into account.
Okay.
The general public, they don't really, they know what it feels like. That's all they care about. So, I mean, the numbers are not something to hang up on because they
Okay.
really don't mean anything in extremis. We're in an extreme black swan situation, and I don't think anybody's figured out a way to measure that. Traditional
All right.
measures don't work.
Okay. Well, look, go ahead. So Kevin Beavers now sent you a second question. Uh, what does it look like if and when the financial system collapses here or globally because of a security breach or similar attack? Interesting.
Yeah,
That,
that's a
that's a
harder
that's a black
question,
swan.
Beav.
That's a very
Yeah,
black
way to
swan.
go, Beav. Yep, got me there. No, I think it would look a lot like the financial crisis
Yeah.
because no one would know. They would not be able to judge whether if they got an order, they wouldn't even know if it was legit. So
Yeah.
it would be a total lockup.
I think one
And
of my biggest fears with the market was with the change in algorithmic trading, whether there were, some algorithms that weren't quite stable enough to, and I was really
yep,
concerned if that would happen. But it seems like everything. I know we've had people talking about it had something to do with the oil futures on Texas crude, but I don't think that's true. But anyway, interesting to discuss. But let's wrap this up, because I'm sure a lot of our people have given up already almost an hour of their time to be with us. I
Oh, it
know.
was worth it though. It was worth it.
So, when I chatted to you about a month ago, you said you had taken your bike apart for the third or fourth time and you had nothing else to do. And then recently a tree fell down on your river house, so you've been out there rebuilding the river house. And my understanding is that the people there helping you don't quite understand the term social distance, or maybe they do and they just reject it completely.
I think it's the latter case, Danny.
Yeah.
Every one of these work, these are heavy equipment operators. They're guys that run chainsaws. They're roofers. They're carpenters, plumbers. I had a lot of damage, but it's going to be great. It's going to be better than ever. So, meanwhile, it's a pain, but almost universally, they look me in the eye and they extend their hand, and they just dare me not to shake it.
Wow.
They know what they're doing. They know what's going on.
Yep, absolutely. And so that's what's wonderful about this country, is that we have these two extremes. We have the fearless and the fearful, and somewhere in the middle, we all find ourselves trying to navigate this way. How are you and Brenda surviving this yourselves? Are you at each other's throats even more than you normally are, or how is she managing to put up with you?
Oh, it's just blissful, just absolute bliss. I can't even describe how wonderful it is.
Okay, all right. Enough of that.
That's Brenda.
I know you. I know you well enough. I know exactly what you're saying there. So let me ask you a question. When do we go back to spectator events? When do we have a NASCAR race with spectators? When do we go back to a rock and roll concert? When do we go back to a trade show with 50,000 people walking into a convention center from 70 countries? When does that? What is the timing in your mind? When does this happen?
I would say I'll be on the quicker side than your average person, because I believe that the entrepreneurial spirit, that American thing that you were talking about earlier, people are going to be figuring out ways to make that happen, and it may be new tests, it may be wearing protective masks and that sort of thing. I think it's going to happen. It could happen. It could happen in time for football season. I mean, people are going to be motivated to make it happen by then. And I'm cautiously optimistic that you may see it.
I'm certainly hoping so too, and we'll get onto our own personal side. But of course, we have to start talking about political rallies, because we're coming up for a general presidential election, and this is part of how this thing works. And if we're not able to assemble and we're not able to get together, is there even a possibility of a delayed general election, a presidential election?
Nah.
Never going to happen.
I don't think so. Nah,
Okay.
I don't think
Yeah,
so.
likewise, but it's going to be a different environment, because if we're not having spectator events, it's going to be tough to do a political rally. So the most important question before we go away: when do you and I go back racing again? Is it June? Is it July? When do we go into an environment where we're allowed 20 or 30 or 40 or 50 people to get relatively close to each other? We don't have to be on top of each other like we do as spectator or sitting in planes or these kind of things. When does that happen in your mind?
I think it could be by Watkins Glen or the June sprints. I really do. If you got the nads to get on an airplane, I mean, you're going to have to man up. But here's Beav again.
We'll leave that one.
Hey, Beav, I got a question for you. Why can't you beat me?
That's really interesting. All right, you can tell there's I think we've been hijacked by the racing crowd.
Yeah. I figured that would happen.
All right, so Skip, thank you so much. I really am honored that you agreed to join us here. I cherish our friendship. You've always given me a lot of food for thought. And I think for anybody watching today, people get an idea of this this insightful helicopter vision, the ability to your ability to distance yourself from emotion and look at stuff in a very objective, constructive, critical, sort of analytical
Oh,
way.
Danny, stop it. I'm just a student driver,
Well,
just trying to learn to drive a car.
well, look, please, you and Brenda, please stay healthy, stay fit. I look forward to seeing you guys soon. Make sure that the kids and your newest grandchild, please make sure
Yes,
they all stay fit and healthy. And I'm
thank
sure
you.
we'll see each other again pretty soon. To our viewers that have, other than Mr. Kevin Beaver, who has sent through all of these questions, thank you so much for your feedback and suggestions. We very much appreciate them, and we've tried to incorporate as much of this into our shows coming up. And just in case you didn't get enough of Kevin Beaver's dumbass questions today, Kevin is an IT consultant. He is a guy who deals with computer security. He wrote a
Hmm.
fantastic book called Hacking for Dummies. You've seen this in the typical books with the yellow covers. He is going to be one of my guests. He's going to be my guest on Thursday at 1 o'clock. And he's going to talk about the vulnerabilities of so many companies who are being hacked because their employees are working from home in non-secure environments. And we're seeing a lot of this happen, and this will be a really interesting conversation. So, Skip, thank you so much for joining us. Really appreciate it. To our viewers, thank you for joining in. And if you enjoyed the show, please give us a big thumbs up, hit the like button, and subscribe down below. Thank you very much. And until Thursday at 1 o'clock, look forward to seeing you all. Thank you and goodbye.
Thanks, Danny. Bye.